Welcome to the Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Helen Akrivos on CJAD 800.
Good afternoon, everyone. You're listening to the Real Estate Show. I'm your host, Terry Kilakos, chartered mortgage broker and president of Northeast Mortgages, as well as founder of the Northeast Group of Companies. Joining me, as usual, we have my co-host, Helen Akrivos. How are you, Helen?
I'm excellent.
Excellent. She is a chartered real estate broker and president of Northeast Realties. All these presidents in the room. I love it.
I know.
It's great. What's been going on? You doing good?
I'm doing excellent.
Super.
Can't complain.
Super. Today we're going to be talking about the political outlook on the real estate market. With so much happening in the Canadian real estate market and elections fast approaching, we have a lot to talk about on today's show. Don't forget, you can always reach us at the office during the week or even today, for that matter, at 514-680-4674, or you could visit us online at www.northeastmortgages.ca or northeastrealties.ca. And if you haven't done so already, shame on you. You need to subscribe to our YouTube channel, which is newsonthego.ca, where you get to see all the fun and exciting stuff that happens behind the scenes here at the studio while there's commercial breaks. And I could tell you, last week's show got probably the most amount of comments because we started talking
on
politics.
Facebook.
Oh, yeah. It was fun. I enjoyed it. So before we kind of kick off the show, we were talking about your craziness that's been going on with this transaction that you have. What's going on?
What's happening is, I sort of said it last show, if you're a seller, all of this craziness that's going on is great.
Sure.
But then come time to buy, and if you're doing both together, like my lovely clients, when we were able to secure the sale of the home, then the stress comes when it's time to find a home, a particular home in a particular price point. There's just such low supply. It's a little bit stressful.
Wow.
Yeah, and then you get into multiple offers, and then brokers, even though, everybody's fighting for their client, things get very heated. So when we're talking hot real estate market, we're talking like hot tempers, multiple offers, stressed out buyers who, are going to be homeless if they don't buy a house. So yeah, we were just up against other brokers, and then we just found out we got the house, so it's just like relief.
Yeah, absolutely. I saw the relief kind of.
Yeah.
Eleni, she had reached out to me about a week ago, and she's like, I don't know what to do. These clients are end up being homeless because they couldn't find a house that actually met their needs, right?
Knocking on doors, literally.
And I remember even I had this conversation with them. You had this conversation with them where we were saying, look, your house is going to sell fairly quickly. Let's find a place before you actually sell. And, this is an interesting thing because it's almost counterintuitive, and it doesn't, depending on what's happening in the market, you can kind of flip-flop between that. But what's your feeling right now? Do you think people should be selling before buying or buying before selling?
It's hard to buy before you're selling because you don't have your dates yet.
Sure.
And so if you're buying a house and you haven't sold yet, it has to be a conditional offer.
That's right.
And because the market is so hot, who's going to accept a conditional offer? Nobody.
Yeah.
Right? So that's off the table now. Unless you find somebody who's willing to wait, it's rare, right? So you kind of are forced to put your house on the market, put a later date for occupancy. Even then, you have people who come and they want to buy your house. They want to move in 30, 60, 90 days, right? Nobody wants to wait till next June to move into your house. So it takes a lot of strategic planning. Okay,
so I know that it's a question that's on a lot of people's minds, and it's related around, let's say you buy something before. You're buying something before you sell your place, right? Which means that you're going to make that offer conditional upon the sale of your property.
Yes,
okay.
Unless you have cash.
Right, unless you have cash, of course, okay? But most of the time, people are going to make it conditional upon the sale of their property.
Yes.
And let's talk about what's the mechanism, if you will, in there, because for me it's easy, it's counterintuitive. I do the mortgages, I do all that, so I see it. But let's talk about the 72-hour rule.
Yeah.
How does that work? And I think that there's a lot of our listeners that are curious about it. I've actually gotten a few questions about it this week because it is a topic that's been coming up more and more. Yeah. So talk to me. What's the deal with that?
So basically, you make an offer conditional on the sale of your home, and you still have to go through the process of your inspection.
Getting financing.
You get the financing, so you waive those conditions. But at the same time, you give the seller the right to continue selling their home. And so you're not blocking the seller. So you obviously there's a deadline. So you say, give me 2 months to sell my house. I got my financing. I did my inspection. Within the next 2 months, however, if somebody does come and bring you an offer, let's say, Mr. Seller, you have to advise me, give me a 72-hour notice. At that point, I can drop my condition of selling my house. I can maybe find the cash, let's say, without selling my house.
Sure.
Or within 72 hours, I'm going to have to let go of my offer and lose my offer, and then somebody else will be able to buy it.
And how is that 72 hours presented to the existing buyer of the property?
So usually it's a notice that comes through in form of a written notice.
Okay.
So the sellers notify that we did receive another offer. You have 72 hours now to either remove your condition, sell your house, prove that you've sold your house, or unfortunately we're going to have to cancel your offer. So it's a risk.
And I find more and more when stuff like that comes up, the really sneaky agents, what they're going to do is they're going to strategically make that 72 hours occur on a Friday, so all of a sudden, banks are closed on Saturdays and Sundays. That's another reason why you guys should be using a mortgage broker, because mortgage brokers do work on Saturdays and Sundays.
Really?
Yes, we do. Okay, so they issue the 72 hours on the Friday, and then all of a sudden, by the time Monday rolls around, that's the only time that you're able to actually do anything, and most people end up losing.
Yeah, I mean, most agents are not sneaky, Terry. Most agents are honest, and we have to follow, like, when we get the offer, and the other offer is accepted with the conditions fulfilled, that's when we have to do it, and then it's 72-hour calendar days, so it could fall on the weekend, like you said. Right.
Okay. So before we kind of really kick off the show, I do want to kind of give a little bit of a market update as to what's going on the mortgage front. Mortgage rates have been going up. Not a lot, but they've peaked up a little bit, which we tend to see this at this time of year. We end up having 5-year fixed rates kind of just tick up, about 10 to 20 basis points, depending on the lender. So it's nothing crazy. You could still get ridiculously low 5-year fixed rates, but we did end up seeing like a little bit of a tick up. There was a lot of panic in the market. There was a lot of, interest rates are going up.
They just went down like a month ago.
It went down, but then it went back up. And it's a normal thing. I mean, like I said, we see it every single year this year. Some economists are saying that it's related to the fact that, there was the bombings in Saudi Arabia and there was, the oil supply dropped and all that stuff. We see it every year. This time of year, it's a cyclical thing. It's a little fluctuation. The good thing is that we haven't seen a major uptick, which means that we're going to probably end up seeing rates stay fairly low for the foreseeable future. The bad news is something that we've all been expecting. We've been waiting for the Bank of Canada to actually reduce interest rates. And right now, inflation is hovering around the 2% mark. And as it's at 2%, they're not in any rush to actually lower rates, because the minute they actually lower the overnight rate, what it's going to do is it's actually going to raise the inflation rate. So they're not in a huge rush. I think that we probably will see a decrease at some point next year, but not anytime soon. The other thing that's interesting, there was the statistics that just came out, and it's basically the proportion of mortgages that are basically given out throughout Quebec, and 42% of mortgages issued is Desjardins. Then we have BMO at 7%, Laurentian at 1%, National Bank at 12%, Scotia at 4%, RBC is at 10%, TD is at 7%, CIBC is at 4%, and then all other lenders are around 13%, which is pretty interesting when you look at it.
42%?
Yeah, Desjardins has a huge market share. So I'd like to continue kind of that discussion in a little bit. Right now, we're going to take a small detour over to the CJAD Traffic Center.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Helen Akrivos on CJAD 800.
You're listening to The Real Estate Show, and today we're talking about the political outlook on the real estate market. Before we kind of went over to traffic, we were talking a little bit about the market share, and during the commercial break, you were kind of
I was
in awe over.
Yeah, I mean, I'm always, the great thing about working at an office like ours is that as a real estate broker, I'm constantly updated about the mortgage market, right? And vice versa. So I didn't know that.
Yeah, so 42. It's a big number. 42% of the mortgages in Quebec are done by Desjardins, which is unheard of. When you kind of look at it, for one lender to have that much, but. Think about the kinds of mortgages that Desjardins actually does, right? So they're going to go out into the boonies. They're going to lend wherever.
And for different types of properties, right?
Different types of properties. Exactly. They do everything. Whereas, someone like, I don't know, RBC might be limited and say, well, you know what, we're not going to go over there. We don't have branches out there. We're not interested in lending out in, I don't know.
Which people don't know. They just think all banks are the same. But that's interesting. As a broker, obviously, you see that, right?
Yeah, 100%.
You see the different types of loans that they're giving out. So
100%. So let's get into it. I mean, Eleni, last week we talked about home affordability in Canada and discussed some of the issues such as the mortgage stress test, low inventory of homes on the market, and some of the other kind of political promises of the upcoming campaigns. What would you say has been the general kind of climate in the real estate market so far? What have you been hearing with?
Do you want to hear the weather? You want to hear it?
Give it to me.
It's hot.
Give it to me.
It's hot.
Well, okay, I know that, but what I'm more specifically interested in, and actually as this texter is also interested in, with everything that you've been seeing between all the political parties and stuff like that, who do you think? Well, where do you think it's going? I mean,
Well, here's where it's going, okay? So what we're seeing, and we've never seen this before. We've never seen so many shifts in the market all at once. So what are we seeing? We're seeing condos, for example, surpassing single homes. We're seeing a demographic change. People want condos. So we're seeing also more interest in new construction. And that's echoed in the first-time home buyers plan, where the liberal government is offering 10%, incentive
for first-time home buyers
to buy new construction. So there's a shift towards, new constructions. What else is happening? Rents are going up. Fast.
Do you find that they're going up?
Fast. And so there's a new thing called renoviction, right?
Okay.
Which is, because there's a renoviction. It's a word, I don't know if it's in the dictionary, don't quote me on that, but it's a term that people are coining because we've seen it. So there's the short-term rentals.
Right.
That have increased in popularity, right? There's a boom in this, become an investor. Buy up real estate, evict. I don't want to say evict, but that's what we've been seeing. And so whether they're paying or they're asking tenants to leave, I've seen it. I've read it. I'm seeing it just, people that I know. And this is not just in Montreal. This is across Canada. Okay. So rents are going up. Why? Because people are buying buildings, rehabbing them.
So they're getting in there, evicting the tenants, renovating the properties, and then jacking up the...
And then what's that doing? It's causing,
But, I don't want to kind of go off on a tangent, but... I tend to go off on tangents, so here we go.
Yeah.
Let's talk. Okay, so we're talking rents. Okay, rents in Montreal are ridiculously low.
They're not anymore. That's finished. That's what I'm saying.
Okay,
There's
but
a shift.
Rents in my properties are ridiculously low. I'm not the type of guy that's going to evict a tenant to renovate.
That's why.
I don't do that. But there's got to be something that's...
Okay, so this is it. So Montreal, historically, we have had the lowest rents across Canada.
Right.
This is shifting. So there's all these shifts, and they're all happening at the same time.
Okay.
And this is why we're in the news and everything's hot. So when I say rents are going up, maybe yours are not because you have stable tenants and you're not planning that, okay? But what's happening is that people are foreseeing that Montreal is a booming city. There's jobs coming. There's different companies setting up their warehouses here. There's a lot of investment coming into Montreal, okay? And so investors are buying buildings, evicting, and rents are going up. And so there's a shortage of affordable rents. There's a shortage of affordable homes, right? And then we're getting to the supply and demand. So what's happening and what's going to continue happening? I'm looking at all these incentives. We're going to talk about them, like what, each party is offering. And they're offering, to build, for example, affordable housing. They're offering incentives for first-time buyers, but the prices are going up. And so as long as the prices are going up, how are people going to really afford these homes? And so it's good for certain people, good for sellers, good for developers, good for new construction, not good for renters, not good for buyers. We just talked about, the multiple offer situation. We've never seen that before.
Right.
So we have all these situations that we've never seen before. We just haven't seen.
And the thing is that when we're talking multiple offers, I mean, let's just, we've seen multiple offers, but we've seen multiple offers in certain neighborhoods. Now we're seeing multiple offers across the island. I mean, I'm giving,
pretty much.
I'm giving the example of on my street where actually one of our, I don't know if I mentioned it
in DDO.
In DDO.
Oh, forget it. DDO was multiple offer heaven. Okay,
yeah, absolutely.
Crazy.
I mean, and this didn't exist, right? I mean, I remember a couple of years ago, I actually did a show, which was part of the News on the Go. So on the YouTube channel, I had a clip, and it's still there of me kind of walking, drinking my coffee in front of my house, walking, and there was a ton of for sale signs. And even my house, when we ended up buying it, it was on the market for 2 years before we actually were the ones that picked it up. The minute we bought, it just started exploding the market to the point that one of our agents from Northeast Realties listed a house on our street, so on my street in Dollard, and within 1 week she had 3 offers, and it's like like multiple offers, right at asking price, boom, and it's gone. It's off the the market. The house.
So really it's what we have to actually look at is why is this happening, and it's really the supply and the demand.
Sure.
And I think we're gonna get back. It's all gonna come back to the mortgages. I think.
Sure.
Because I think it's one of the reasons. I think there's other reasons also.
Are we bringing this back to the stress test?
It's probably going to come back to the stress test because it's a lot of challenges for buyers, right? I mean, that's what we're seeing. And if they buy, then they have then they have to rent, and then the rents are going up. It's just a lot of stress.
Sure.
So why are there not a lot of signs up? Why are people not putting up their homes for sale? I think we had this discussion because they come in for a pre-approval and
they
don't
qualify for something else. Yeah.
They want to and they want to move to the bigger, but they don't qualify because they have to qualify at 2 points higher than the posted rate. Is that it? Negotiated rate.
So for those of you, and when this stress test is eventually eliminated, I don't know what we're going to be talking about on this, but
this is what we want to talk about. Any parties promised to eliminate it. I know one of them has promised to review it.
Yes. So the Conservative Party has said that they're going to review it. They're going to look at it, and they're also talking about increasing the amortizations out to 30 years.
Yes.
Which is great.
Which will lower the monthly payment.
Lowering the monthly pament. Now all of a sudden you're able to qualify for something a little bit higher. Yeah. They're talking about reviewing the stress test as well.
For first-time buyers only, I read.
Yeah.
Apparently.
So they're also looking at removing the stress test for renewals. So what does that mean? So let's say your mortgage is up for renewal. You want to start shopping. You want to see who's going to be able to give you the best rate. You shouldn't have the stress test lingering over you, preventing you from going outside. All right. Up next, we're looking at the stress test and how Conservative leader plans on modifying it.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Helen Akrivos on CJAD 800.
Thanks for joining us on The Real Estate Show. Today we're chatting about the political outlook of the real estate market and how this affects you. Feel free to reach out during the week at 514-680-4674 or by visiting us online at northeastmortgages.ca or northeastrealties.ca. Don't forget, if you haven't done so already, please take a moment and go and subscribe to our YouTube channel, which is newsonthego.ca. So before the break, we were kind of talking about the Andrew Scheer and the stress test. So, the Conservative Party is looking to kind of release the pressure a little bit. So they want to modify a little bit the stress test. They're looking to tweak that. They're looking to extend the amortizations out to 30 years. They're also looking to remove the qualification of the stress test when you are renewing for a mortgage. So I kind of started talking about it. What that basically means is, let's say your mortgage is up for renewal. You've done your 5 years. Now your bank comes to you and says, we're going to offer you, 3.5% interest. And you look at them and you're like, well, you're crazy because my friend just got, 2.5%.
Yeah. Well,
at that point, you have the ability now, if the stress test is not there, to go and shop the market.
Okay? Which kind of makes sense.
It makes sense. And actually, let's take it one step further. Once upon a time, there wasn't even any qualification when you wanted to flip from one institution to another. But over the years, it became more and more tough because bank lobbyists didn't want people to be leaving those institutions. I remember there was a couple of virtual lenders online. When you were switching from one bank to another, there was basically, it was a low doc, no qualification needed. As long as it was dollar for dollar, amortization for amortization, I was able to switch you from one institution to the other, no qualifications required. They didn't look at pay stubs, they didn't look at letters of employment, and that's the way it should be.
Yeah, but I mean, obviously, a lot of these rules came in. I mean, you had spent many shows talking about this. OFC put in a lot of these rules,
100%,
right?
yeah.
And so, I mean, we're talking about promises that they're looking to review, but these will have to be approved, right? I mean, they have to go through.
Yeah, obviously,
right?
Parliamentary committees and, spending tons of taxpayer monies.
And so the Liberals, what are they promising? So they're, I mean, they just recently, brought out the first-time homebuyers plan, which just launched September 2nd. So we haven't even really seen, how many clients are really going to be able to benefit from it, right?
Okay, so check this out. So I'm at a conference, the other day, and now it's September 2nd is when this thing was created,
launched.
right?
Well, it was
created
launched before, but it took effect
launched
September 2nd.
September 2nd. And there was an economist, and he basically says, out of curiosity, now there's a room of 450 mortgage brokers.
Oh, boy.
And he said, out of all 450 of you, how many of you have actually used the first-time home buyers incentive program for one of your clients? And I look around the room, and there was 2 hands that went up. Canadians are not interested in this.
What about for new construction? You get 10% more down payment.
Maybe for new construction, but Canadians are not interested.
Yeah. Is it because it's still new? And
it's not because it's new. It's because Canadians are smelling a rat in it. I'm sure of it.
But get this. They're saying that it was just launched, but the Liberal Party is saying that they're actually going to, tweak it. So it was just launched.
Okay, so what's the tweak? Go for it.
I mean, they're basically saying that they're going to increase the amount. So there was a cap, right, of about 480 to 500,000 in terms of like a limit of a purchase price. They realized that Vancouver and Toronto, that's not going to work, right? In those markets. So they're looking at tweaking it and increasing the prices just for Vancouver and Toronto. So that's not going to change anything for us in Quebec.
They're also looking at the qualifying income from 120 to 150, 180.
Yeah, 180,000. But again, that's to help those markets, right?
That's it.
So
I don't think that we're going to see a lot of people going towards it. Every single client that I have met with, and it has nothing to do with me dissuading them or convincing them to actually go for it. Nobody wants to do it. They all kind of look at it.
Because of the shared equity thing?
Yes, they don't want to have anything to. And the main concern is, and a couple of weeks ago we did an entire show on this where I tried to stay very neutral and very positive because but I wanted to stay very neutral on it because I'm not the type of guy that wants to kind of. But there is a lot of question marks. Like one of them, it has to be paid back in 25 years. What if you don't qualify for a mortgage in 25 years when you want to pay this back? What happens? Do you have to sell your house? So these questions were asked to the Liberal government, and they kind of looked and said, well, I don't know. Yeah. What do you mean you don't know? If you don't know, who knows? You know what I mean? So we haven't thought about that. So this is a perfect example of, it's like setting up a loan, right? You come to me and I say, let me set up a mortgage for you. And you say to me, what's the interest rate? I don't know. It doesn't matter. We'll figure it out later. No, it's not we'll figure it out later. Or what are the terms? We'll figure it out later. You can't do that, right? You need to have plan after plan. You need to have contingency put in place because that's the only way that a buyer is actually going to be able to make a proper, educated decision. If you don't have that... It's forget it, Anyways, so I mean, you're feeling
unless it's going to help. I mean, and you're going to see this maybe more than we will on the real estate side. Unless it's going to help those people that just need that little boost. I think it's good for new construction. I mean, they're giving you 10% down extra, right? That you wouldn't have had otherwise. Is it going to help?
I like, at the risk of sounding like I'm a conservative as opposed to being a liberal. I know you like
the 30 years.
Okay,
yeah.
I like the 30 years. I don't think that it should be, we look in the States, it's at 30 years.
But it's not here yet. Let's be careful, right? We don't have it yet. They have to put it
We have 30-year amortizations.
Oh, we have it.
We have 30 and we have 35-year amortizations in Canada. But we don't have them on insured mortgages. Okay.
So that means if you're putting under 20% down, right? So if I'm putting only 15% down,
you're capped at 25 years.
I'm capped at 25.
Okay.
So if I'm putting the 20%, then I can get to 30 years. Okay.
Exactly. Okay. You're capped out over there. Now, the other thing is that, when you're looking at the stress test and now you're talking about, let's say somebody wants a home equity line of credit, right? The stress test, the way that it's designed is you have 5.19%, which is the Bank of Canada rate to qualify them on, or 2% above the rate, the contract rate. So if someone is taking a line of credit and their line of credit rate is at 4.45, we're going 2% above that, right? 2% above 445, which takes it to 645 to qualify. I had a file, excellent client the other day. He was like, I need a line of credit. Didn't work with the bank.
But
Why?
That's
because
just on the line of credit, right?
That's No, but if it's a collateral charged mortgage and it's the bank, the way that they're going to look at it, they're going to take, if it's $100,000 line of credit and $200,000 mortgage, they're going to say $200,000 has to be qualified at 645.
Okay.
And it doesn't work.
That's tough.
It's tough. Okay. So, it needs to be tweaked. Like there's no ifs, ands, or buts about it. It really, really needs to be tweaked. Stay tuned for more talk about election promises and the real estate market. And now we'll take a small detour over to the CJAD Traffic Center.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Helen Akrivos on CJAD 800.
Today we're talking about the upcoming elections and how housing has become a key issue in the upcoming election. You're listening to The Real Estate Show. Don't forget you can always reach us at 514-680-4674. Olympia is always there to take your call. And if you haven't done so already, please go on and subscribe to our YouTube channel, newsonthego.ca. So last week, Eleni, we got into this ridiculously heated argument, off air.
I wouldn't call it an argument.
It was a discussion, a heated discussion, where we were, and it was about taxes, right?
Yeah.
So what are we looking at? I mean, you mentioned kind of last week that you think that there's going to be an adjustment in the taxes. I don't think that there's going to be an adjustment in the taxes. What's the common consensus? What have you been seeing on the real estate front? Do you think
what I'm seeing is that values are going up, right? In general, right?
Yes.
Values the last 2 years in Montreal, like I've been telling people, I mean, if you had a Plex on the island of Montreal, it went up 15% in value, just generally. That's amazing. So it's good news for me because I'm in real estate and I think, appreciation of property in Montreal is a good thing. But then when people hear, okay, well now the municipalities are going back and they're going back to July of 2018 and they're looking at the increases and now they're calculating the municipal assessments because they have to charge taxes and they have to base it on something. And so they use the previous sales and they do their calculations and they increase everybody's assessment, right?
That's right.
Every borough is different. So you're going to see, some people in Beaconsfield more upset than other people in other areas. I think it's a normal thing that assessments have gone up. Have they gone up more than previous years? Yes. Because the appreciation and the values of our properties are going higher faster, right?
Right. But my only issue is, and this is kind of what the argument, if you will, came from, was when we're looking at, Valerie Plante and the way that she's basically increased the mill rate over the last couple of years. So she's consistently, we're not going to increase taxes. We're not increasing. But mind you, she goes in, she increases the mill rate once. Then she goes back and she increases it again. Now the new assessments come out. And will they go in and they reduce now the mill rate because they're going to be collecting the same amount of taxes? I don't think they will.
Are you talking about the percentage,
yes,
not the percentage of the assessment, but the percentage of the actual tax,
yeah,
right?
Exactly.
So they attribute a percentage to every area?
Yes.
So some areas, from what I've seen, I mean, this won't kick in until January.
Yes.
But I have seen that, of course, they have to pass, they have to approve all of these increases. I have seen anywhere between, 0.8, 0.7. I've seen 1%.
Yeah.
I've seen some areas are like 1.7, 1.9. I mean, it's,
Yeah.
of course, you know what? Here's what I'm going to say. Okay. Here's what I say. I think it's case by case. I think we can't go crazy. That's what I was saying in my argument. I was saying, you were going a bit, you got a bit heated.
I got heated.
And I was just saying.
And I'm usually the calm one.
Yeah. And I was like, whoa. I was like, let's calm it down and let's take it case by case. If you get your assessment, you feel it's out of control, it doesn't make sense, and I can speak from personal experience. I've done this with my own property. You know what? You contest it. And it costs $300 and it works. I've done it. You fill out the form, you give them the reasons why you feel that your property should not have gone up by, whatever percent. And you know what? It's fair. My property, they reassessed it and it came down to a value that I was happy with.
Yeah, but the one thing that I do have to say about the contest, and I agree with you 100%, but it is a double-edged sword. So for all our listeners, okay, if for whatever reason you get your value in and you contest it, and then they'll actually send the appraisers out and they'll look and they'll say, hey, yeah, you know what? You're right. Your value is not this.
Oh, come on,
It'll
Terry.
go up. I've seen that too. I've seen
Really?
it go the other way.
Okay.
I have seen it go the other way. It's very rare, but I have seen it go the other way. So just be careful, of what you're doing, because it could end up causing some other issues that weren't necessarily kind of meant to be. Let's look at take a little bit of a tangent here, because this is another question that comes up often: immigration. Okay. When we're looking at the immigration, do you think that the higher immigration is actually helping the real estate market at all, or?
I think it's definitely affecting it, and so we keep hearing the word demographics. Okay, so there's there's different types of immigration and migration. There's a lot of migration from other provinces of Canada.
Sure.
And actually, vice versa. There's like the province of Charlottetown. The city. It's booming. It's one of the smallest places in Canada, and then people are going there. The university's full. So there's a lot of, movement, right? Like we said before, a lot of job creation, a lot of foreign students coming here. So it is affecting the real estate market. I can't say if it's having a negative or positive. I think it's changing what people are buying. So for example, why are condos popular now? How come 2-3 years ago when I took, a listing for a condo, it wasn't selling. It wouldn't sell. I didn't even want a condo listing. Now it's different. Why? Because the people who are now coming in, whether it's from different Asian countries, these people, they are used to, they like condos. They live in condos. Single family homes. It's the demographics are just changing. So I think it's just changing our real estate market.
Landscape, the real estate.
It's changing what's in demand. What are people looking for? So rent. We were talking about rent. Why are rents so high? They're high because we have people coming in. Refugees that are setting up their lives here.
Which they won't qualify for a mortgage,
Not right away.
Because they don't have the track record and whatnot. So,
exactly.
So they have to rent.
They're coming in, they have to rent. There's not a lot of rent.
And then you end up having a ridiculously low vacancy rate in Quebec because of that.
Because there's a high demand for rent. So all of these changes in demographics is actually what's changing our real estate market.
And we're seeing more and more, condo buildings that are going up. Well, I'm doing kind of the air quote thing when I'm saying condo buildings, because they're not condo buildings, people. They're apartment buildings.
You mean the rental? The buildings?
Yeah, they're exactly. Yeah. And we're seeing purpose-built. Yeah. Okay, they're calling it the condo lifestyle. So you're renting, but it's a condo lifestyle.
It's a new apartment.
Exactly.
Instead of renting in an old Montreal building.
Yeah, exactly.
You're getting to rent and feel like you live in a nice new luxurious condo, but you're renting.
Exactly.
But also the population is aging, right? And so that's another reason they're building these.
So you're seeing more of the aging kind of population moving over to that?
They're all renting. They're all renting because for them to buy, think about it, right? For them to come and get a mortgage now and even buy a condo prices have gone up. So they're switching their home, I don't know, $500,000-$600,000 home for maybe a $450,000 condo. Like, it doesn't make sense for them, right? So they're all renting, and so we have a lot of purpose-built rental buildings.
Interesting.
Yeah,
that's very interesting.
So that's why our market there's so many things happening at the same time.
Yeah, Eleni, we've run out of real estate. If people want to get a hold of you, how do they?
They can call our phone number, which is 514-716-6188, and that's Mary who will be answering you.
And if you want to call the mortgage side, by all means, you can call us at 514-680-4674, and Olympia will be answering. And if you want to visit us online, it's northeastmortgages.ca or northeastrealties.ca. .ca as well. On behalf of Northeast Mortgages and Northeast Realties, happy sweet New Year to all our Jewish listeners. Shana Tova. Enjoy Rosh Hashanah tonight, guys. Don't forget, you can subscribe to our YouTube channel, which is newsonthego.ca. Guys, love you all. Have a blessed week.